back. You're watching The Money Show on ET Now. The new tranche, that's tranche number 5 of the sovereign gold bond scheme, is now open for subscription. It's offered by the government on behalf of, it's offered by the RBI, pardon me, on behalf of the government of India. And as the name suggests, it's sovereign, which means it's backed by the government of India, one of the safest instruments out there with zero credit risk. And interestingly, this tranche is of course also coming at a time when gold prices are not at 50, not at 52, but 55,000 rupees per 10 grams. This particular tranche is available at 5,334 rupees per gram. Definitely the highest that we have seen, in the last couple of months that we've seen this tranche being launched. Let's talk about, investing in gold via this instrument. Let's review this instrument with Mr. Anil Rego, the founder and CEO of Right Horizons. Mr. Rego, thank you for joining us today on The Money Show. I hope you and your family are staying safe amidst this pandemic. What's your view on the sovereign gold bond scheme? I mean, what features of this method of investing in gold look attractive to you?
Yeah, definitely the sovereign gold bond scheme is a scheme to consider for a couple of reasons. One is that gold is sort of doing well, so there's a lot of interest from people to invest in gold. Okay, one needs to keep in mind that once something has gone up, you need to be a little cautious as you go forward. However, we think that it's not a bad time to invest in gold yet, and possibly will sustain for some more time. What makes it interesting is compared to buying gold, you don't have all the hassles of holding gold in the physical form, where you have to safekeep it either in a bank, etc., lock up, and there are costs to it. There's always this fear that it gets lost, etc. So it's actually in the virtual form. It's in the form of a certificate, or you can hold it in your demat account. So that is one area which sort of makes it interesting for somebody. The second is that actually it gives you a 2.5% per annum interest, and this interest is payable. There's no other instrument that invests in gold and you can get an interest apart from the gold appreciation itself. And the other great part about it is on maturity. If you hold it through maturity, it is an 8-year scheme. So if you end up holding it through maturity, then it is also tax-free. Now, the capital gains definitely can be reasonable over a period of time, over a period of 8 years. And if you're lucky and gold prices are still high at that point of time, it is tax-free as well. So I think this 3 or 4 key points which make investing in sovereign gold bond scheme something to consider.
Okay, I just want to understand the liquidity aspect of it. One of the key disadvantages of buying gold jewelry, gold bricks, etc., is that it's not very easily liquidated. In case if it's needed, in case of an emergency, etc. What about sovereign gold bonds? They're fixed bonds. I don't think there's a market, a secondary market where you can trade these bonds either. So if you could just talk to us about that aspect.
Yeah, so actually a slight negative about it is the long tenure and as well as in terms of liquidity. Now actually it is tradable on the exchange, okay, but the difference is is it liquid enough that you will be able to get a compensating buyer. So unlike ETFs, which today there's a market which has got created, buyers, sellers, and you'll probably get your price reasonably easily on the sovereign gold bond scheme. Even though it's traded in the exchange, the volumes are not very great. So I think over a period of time, hopefully it will get better. So that is definitely a bit of a concern. However, there's a period after 5 years, you can actually go in for a redemption. Okay, and so that will get your money back when you sort of redeem it. So you have the option to do that. But up to 5 years, you completely depend on liquidity, on the exchange where you are able to sell it there.
If you could talk to us about the tax aspect, It's great, you're getting the 2.5% interest, but what will be the tax implications? I mean, if since it's sovereign, is it that it's tax free, and also during maturity, what will be the tax implications?
Yeah. So there are two parts to it. This one gives you interest as well. So the 2.5% interest that you get is actually taxable. So that's not a great thing, so not only is it low, but on top of that it is taxable. But the capital gains on maturity, so if you hold it till maturity, like I said, 8 years, then it is completely exempt. And this is a huge plus. Not even, the 10% capital gains, etc. It's completely exempt. If you end up redeeming it earlier, okay, then you can, when you sell it in the secondary market, it is taxable as capital gains. So you will end up paying the thing based on the tenure, if it's long term or short term, and accordingly you will pay 20% after indexation for inflation.
Okay, so if another point I want to ask you about is the fact that it's at 5334. That's where the latest tranche is priced. Now, gold prices themselves have already crossed 5,500 on a per gram basis. But still, 5334 may seem a little more expensive. So how much would you advise investing? I mean, if somebody, let's say, has not got any paper gold investments, should they start off with this SGB at 5334?
Yeah, so from a longer term perspective, gold is a good asset to have. It is complementary with equity. It is negatively correlated, which basically means that at times when really there's a real bad crash, you'll find that gold does much better. So having it will sort of give you a better return on the aggregate both together. So it is definitely an option to look at when you expect volatility. We think gold will also have a little bit more steam left because various actions that central governments banks are taking, and the governments as well, in terms of putting in liquidity, they all would probably impact currencies, and gold as a counter goes up in that period. So definitely I think from a longer term perspective, even though the price is at a high, possibly the gold rally lasts for multiple years and not just a year or so. So I think it's something to consider for the long run. However, what we think is if you have, let's say, a portfolio of 100 rupees, I think overall your gold allocation we recommend somewhere between 5 to 10%, depending on where the market cycle is. So 5 to 10% can be used, and if you don't have allocation to that level, it may not be a bad idea to spread it out into a few tranches, okay, and get back to at least a 5% in terms of allocation to gold.
Okay. Great. Well, there you have it. That's essentially total everything that you need to know on sovereign gold bond schemes. Mr. Rego, we've received some questions as well on investing in gold. I just want to get in your opinion on those. First up, we have Tushar asking, is gold monetization scheme available now? Is it a good idea? And at this juncture, the facility is only available in a few cities. So how can people in other cities avail it? Mr. Rego?
Gold monetization scheme is an option which is available where you have gold and it is sitting idle, especially like if gold bars, if it's jewelry, you may or may not want to give it in, but if you have gold bars, you've kept it as an investment, then minimum of 30 grams of gold have to be deposited of 995 purity, and you get an interest of 2.25% per annum. Okay, so there are various options available, 5 to 7 years, 12 to 15. There's also 1 to 2 year, 3 year, option available, but it's at the discretion of the bank, and not too many of the banks are sort of offering it. You get a 2.25% interest if it's 5 to 7 years, and a 2.5% if it is 12 to 15. So rather than holding it back, and the safekeeping costs, etc., something like this, if you are using it as an investment, then the gold monetization scheme is definitely a good thing to look at. Now, the point to be noted is, yes, It's not available at all branches of the banks. It's available at a few banks, so we need to go back and check whether a bank offers it. And mostly it's available in the cities, unfortunately. So if you are not in any of those locations, then you may need to go back to one of those major cities where it is available. Of course, you can check maybe with multiple banks because different banks may have different locations. And if something is available in your city, then you can just go back to any of the banks which have it and you can sort of avail of it. Keep in mind that there's a 3-year and 5-year lock-in for these two options, and you cannot sort of pull it out before that, and after that, till maturity of the scheme, you have the penal interest of 0.252 or 0.375% on an average, depending on the tenure.
Okay, well, great, Mr. Rego. Thank you so much for joining us today on this edition of Money Show to talk about the sovereign gold bond scheme and help our viewer out with this gold monetization scheme question as well. Well, folks, don't forget, 7th August, this subscription period ends. But with that, we're out of time, so we'll wrap it up on this episode of The Money Show. Thanks for watching.